Hey guys, it's Juan Deshon here at Quest Trust Company. Today I want to talk to you guys about the traditional IRA account. We're going to go over the advantages, disadvantages, and some key points you want to know in regards to your traditional IRA. So to start off, just so you know, the traditional IRA was started with the ERISA Act in 1974. This was created to incentivize individuals to start saving for retirement personally instead of just requiring or in the need of a corporation or a company to sponsor a 401k plan. So individuals were now able to get a personal traditional IRA account. And this is probably the most common IRA account that we see out there here at Quest, and probably in any custodian for IRAs that you see out there in general. The reason being is because this is the pre-tax, tax-deferred treatment type of account. Now, when we're talking about where America's wealth is, it's mostly in 401ks, old retirement accounts, and when they move it over to an IRA account, it's pre-tax money. So to not get taxed, to not get penalized, they move it over to what's called a traditional IRA. And that's the account that we're going to focus on today, on what the advantages are. So to start off, the first big thing is tax deductions. Now, putting money into a retirement account like a traditional IRA benefits you with tax deductions on the amount that you put in. However, you have to qualify. If you make over a certain income limit, and specifically your modified adjusted gross income is over a certain limit, you cannot use the contribution to a traditional IRA for a tax deduction. However, there's a caveat to that. That is only if you are sponsored by an employer plan like a 401k. If you or your spouse is not sponsored by an employer plan, then contributing to a traditional IRA will always give you that tax deduction. Now, if you are a person who is sponsored and want to know what your limits are, you can double check on the IRS website. However, I have these numbers here. And if you are a single filer, your phase out range is between $66,000 and $76,000. If you are someone that's married and filing jointly, it's between $105,000 and $125,000. Now remember, this does not mean that you can't contribute. It means that you may not be able to take a tax deduction and you're in one of these phase out ranges and you are sponsored by an employer plan. If you're married and filing separately, that limit's a lot lower. It's actually $10,000. So filing separately really kind of hurts you a little bit when it comes to your modified adjusted gross income. Now, the biggest thing about a traditional IRA, it's a tax-deferred account. When I say tax-deferred, I mean whenever you're growing that account and the money in there, you're not paying taxes now. But what it's doing is it's deferring taxes to the future. So you will pay taxes eventually, just not today. The age at which you can take the money out is going to be 59 and a half. That's the age in which a 10% penalty for you to take money out gets lifted. So any age before then, if you were to take money out of your traditional IRA account, you'd be taxed, but also penalized an additional 10%. You may be asking, what kind of tax am I looking at? Well, that depends on your personal income. Let's take an example. If you are making $100,000 and you distribute $10,000 from your traditional IRA, and let's say you are over the age of 59 and a half, what you are doing is you're just adding $10,000 to your annual earned income. So you'll pay at your current tax rate. If you're someone below 59 and a half, then on top of that, you're also adding a 10% penalty on that $10,000 that you took out. Another unique thing about a traditional IRA or tax-deferred accounts in general is going to be RMDs. This is required minimum distributions. This happens when you reach a certain age in life and the IRS demands that you take out a certain dollar amount every single year based off of your annual evaluation of that account. So let's take an example. Once you turn the age of 72, what ends up happening is you take the value of your account and you divide it by a number that the IRS gives you. Let's say that number is 15. That number, or after that equation, is the amount that you have to take out that year to satisfy your required minimum distribution. The goal is that every year that number gets a little bit larger, your required minimum gets a little bit larger as well, and you start to deplete the account. In turn, end up paying taxes for the IRS, right? So now that we know that this IRA is very common, it's very useful for tax deductions, you may have RMDs based on your age, and we know when the IRA distributions are penalty free, let's talk about if this is right for you. So let's recap a little bit. The advantages are tax deferred gains, tax deductions on your contributions, anyone can contribute, and you're saving for retirement. Now, the disadvantages are you pay taxes on your distributions, you have required minimum distributions at age 72 and moving forward, and you have penalty if you take money out prior to the age of 59 and a half. So if you yourself are considering a traditional IRA and wanting to put some money in and are wondering how much can I put in a year, there are contribution limits. Again, doesn't matter what your income is, you can always put money in this. And this is going to be what you can take a tax deduction on if you qualify. So the contribution limits are going to be $6,000 if you're below the age of 50 and $7,000 if you're above the age of 50. Every few years or so, this may go up. So make sure to always keep track of how much you can contribute for that year. In 2021, again, it's $6,000 for under the age of 50 and $7,000 if you are over the age of 50. Starting a traditional IRA is very, very simple. Here at Quest, the first thing you want to do is you want to talk to an IRA specialist to make sure that we set you up with the right account and we answer all the questions that you have prior to getting started. These IRA accounts can be completely self-directed at a custodian like Quest and can invest into things like real estate, promissory notes, and private companies. We can show you how, and be sure to log on to any of our webinars, watch our YouTube videos on how you can buy real estate, how you can buy private assets with these self-directed IRAs, specifically your traditional IRA account. If you have any questions, feel free to call us at 855-FUN-IRAs or email us at iraspecialist@questtrust.com. My name is Juan Deshon. I'm looking forward to speaking to you guys soon. Thank you.